minutes a day. How many of you consider yourselves position traders? In other words, holding stocks for more than a short term, longer term. Okay, so most of you. Anyone here have an interest in day trading? Making a living trading? Okay, quite a few actually. Again, theoretically, same way we do things. We're just going to look at different charts. And so what I'm going to talk about now is the process of managing your portfolio in not a whole lot of time. And this is really focused on position trading. So the Stockscores investor, and this is what we call the program that I teach around this type of approach, is holding trades for 2 weeks to 2 years. We hold stocks as long as they're good. And so a stock like Apple, we just don't get a sell signal on it for a long time. We stick with that. Most stocks give us a sell signal, I'm going to say within 3 months. Because most stocks don't outperform the market for longer than that. So for example, and I'll show this in a minute, but Royal Bank gave us a buy signal late in December and a sell signal, I think it was in March, and it made a nice gain in that time, and then it kind of started going sideways, so I don't want to own it anymore. I'm always moving my money from stocks that are slowing down into stocks that are moving quicker than the market. And that way we get the most bang out of our investment dollars. And you'll see why that's important in a second. We're going to typically look at daily charts for this kind of trading. We will use weekly charts for some strategies. The weekend strategy we use weekly. And it's basically applying our Stockscores investor strategies. And I teach maybe six or seven. Once you get good at the process, and I'll go through the process with you today, it takes 15 minutes to search for the opportunities, and you should be able to spend 5 minutes a day to monitor your holdings. What are you monitoring for? Basically for sell signals. So you need to just quickly check in 5 minutes. You can do it from your cell phone or from a computer anywhere. Just quickly check your holdings to see if you have an exit signal. By putting in that extra time, I believe you can dramatically improve the performance you get in the market. With the Stockscores Investor Program, the emphasis is really on risk management. We're going to focus on the hot market. There's a tendency for people to trade what they know. So here in Vancouver, there's a tendency for people to focus on mining stocks. You go to Calgary, people like energy stocks. You go to Toronto, people tend to like big cap, large cap stocks. And the problem with that is those sectors aren't always good. The mining sector right now is pretty lousy. Meanwhile, however, there is a hot market. The U.S. market is pretty good. And within the U.S. market, companies based in China is a hot market. I've had some great trades off of that hot sector of the market. And if you focus on the hot area of the market, you'll have way better success. And it's really the case for any investor. You know, being a real estate investor in 2005 was easy. Because it was a hot market. Maybe now not so much. Maybe in Vancouver it's okay, but most cities in Canada it's not a hot market anymore. And so you always want to move into that hot market. Alright, so the process of being a Stockscores investor is first, learn our strategies. We're going to use the Stockscores market scan to find the stocks that meet the criteria of our strategies. We're going to practice a little bit with the TradeScores simulator. I showed you that already. With the simulator, we'll be able to determine whether we know what we're doing, whether we have the discipline, whether we follow the rules properly, get the results that we need, and then you're ready to trade. That process for some people takes 2 weeks. For other people, it takes a year. It's all about how quickly you learn and how quickly you become able to do these different strategies. So let's go through some examples. First one is Royal Bank, as I said. So buy signal December 23rd, 2011. Gave us a sell signal on March 29th, 2012. Giving a hold period of 70 days, a 12.2% gain in 70 days, and a reward for risk of 2.44. This is the important number. It means it made 2.4 times what we risked. So if we risked $1,000, we made $2,400. If we risked $100, we made $240. It's all about what your risk tolerance is, remember that. Let's look at the chart. And now we know a little bit about reading charts, so let's go through our key points to begin with. First of all, let's find all of our inflection points. So there's one there, one there, one there. You just draw some lines anywhere price change direction. Yeah, just drawing lots of dots on the chart here at all these little inflection points. Why do I do that? Why? Because I want to connect the dots to see the pattern. If I connect the dots across these tops, I see that I had a downward trend line. If I connect the bottoms, I see that over here I have rising bottoms. So I had optimism. Here I have pessimism. Here I have optimism. Here I had low volatility. Okay, volatility compressed. I was to draw lines here. See how volatility compressed? So now I know that the market was confident late in December that Royal Bank was worth between $48 and $49 a share. And that argument that was going on in the market every day, buyers and sellers said, okay, well, on the low side we think it's worth 48, high side we think it's worth 49. That's a pretty narrow range. And then on this day, we had an abnormal break to the upside, implying that something good fundamentally was happening. And it made people buy Royal Bank aggressively. Now, one of the things that I developed to help us find these are the stock scores. We look for the sentiment stock score, which is our green line, to be above 60. And we look for the blue line to spike up above 80. When the blue line spikes up above 80, there's a good chance there's a breakout there of some sort. So that's how we filter for these kinds of trades. We're going to use the stock scores indicators. So we can see a stock breaking through resistance from optimism, because this low is higher than this low. It had recently broken pessimism, because the downward trend line was broken. And it had low volatility. All of our pieces that we've talked about already today were satisfied. So, we buy Royal Bank. And it goes into a nice upward trend. Let's erase these lines here. If I draw a line across the tops, or across the bottoms, I can see that it started to break that line right there. March 29th is when I put the sell order in on Royal Bank. And since then, it has underperformed. So the buyers kind of got tired. I think actually Royal Bank can still go higher from here, but it's been 3 or 4 weeks of sideways trading. I'm glad I'm out of it. If I was still in it, it'd still be up probably 10%, not 12%. But I've been able to take that money and put it into somewhere else, because Royal Bank lost its upward momentum. Now, where did I put that money? Well, I could have put it into this stock. Gave me a buy signal on April 10th, sell signal on April 16th. My landscaper bought this stock. He was at my house. I said, you need to buy this one. So he goes in and buys it. In 5 days, he made a 24.5% gain, but more importantly, reward for risk of 4.06. That means that this winner pays for 4 losers. Okay, buy signal was here. I actually bought it right there. It was trading very abnormal volume that day. It was in a pennant pattern. What does pennant pattern show? Volatility, diminishing, and neutral pattern, right? The direction into the pattern was up, so we expect the direction out of the pattern to be up. Breaks out of the pennant with abnormal volume, from low volatility, and long-term optimism. I don't know anything about this company. Well, I looked into it afterwards. They're the Chinese Facebook. But what I liked was that it was a China stock, and that was a red-hot area. I had traded a company called Heat, or the symbol is Heat, Chinese company. I had traded DANG, D-A-N-G, on the NASDAQ, Chinese company. All of these China stocks were doing really well in April. One of the few sectors that was really hot. And so when I see another one, I say, wow, hot sector, breaking out of a good pattern, trading out normal volume, that's the kind of stock I want. I sold it right here at the top, just under the top, $7.41. Because on an intraday chart, the stock was going straight up and it started to break its upward trend line. So I dumped out of that one, 24.5% in 5 days. Now let's go through the economics of that trade, because I think it's important for people to put this in a context and really understand how leverage gives you power. So our entry was at 5.95, stop loss at 5.59. Our risk per share is 36 cents. So if we buy 1,000 shares, what's our risk? 1,000 shares times 36 cents is a risk of $360. The cost to buy 1,000 shares is $59.50 plus commission. If you trade through discount, that's $59.55. Now, if you use margin, let's say you get 2-to-1 margin, you would need about $3,000 in cash to buy this stock. So $3,000 in cash allows you to buy 1,000 shares. Now, many people would say you're crazy to use margin on a $5 stock. It's too volatile. But don't forget, we know where our exit door is. When we're buying at 5.95, we're going to plan to sell if it goes below, right there, my red line. And that's the discipline. If you don't have that discipline, don't use margin, because this stock could very easily go like this. We don't know that, right? In this case, it worked, but know that 30-40% of the time, these kind of setups lose money. And so you have to have that plan going in that you're going to take your $500 loss, or whatever your limit is, $360 loss. You have to be able to do that. So with commissions, or pardon me, with leverage, we exited at 741 for a profit of $1,460. Commissions in and out, $10. Nearly 50% return on our capital in 5 days. A 24.5% return on the actual trade, but because we leveraged, we got 50%. Now the rules for that strategy are taught in the Stockscores investment program, and they're actually partly online. So I can go into Stockscores.com and go to the My Videos area, and there's a strategy in here called abnormal. Probably would have come up with the simple. So we go into the simple one here, and it teaches you all the rules there, what to look for, when to buy, entry signal rules, risk management, exit signal. There's even a video that you can watch that explains that. If you want to watch it really big, you can blow it up. Okay, so this particular video is playing, and you can learn the rules for that strategy right there. Then once you've learned the rules, you need to apply the rules using the market scan. So let's do that. You can do this during the day. In this particular case, I found this one mid-morning. But you can do this in the evening. You just find them later. In fact, in this case, you would have got a better price if you found it in the evening. I actually paid a little bit too much during the day, but that was okay. It worked out. So let's go over to the Stockscores market scan tools. So I can select the Stockscores simple strategy. I could apply that to all the American markets, all the Canadian. I can apply it just to the NASDAQ, just to the TSX, whatever. Let's do one for just the TSX. Run the strategy scan. Almost instantly, it went through 1,500 stocks listed on the Toronto Stock Exchange, and it found 19 that meet our criteria. Select all, and I can now view these charts to see if they have the kind of patterns that I want. Most of them won't. I'm only having to look at 19 stocks though, so I can look for the patterns here. I think this is a good-looking stock if you already own it, but it's a little bit too late, so I'll move on to the next one. Okay, this stock is well into its upward trend. That's why it's coming up in the scan, because it has good stock scores, but it's too late for me now. And so our process is just go through these, look for whether there's a good pattern today. I already did this. I didn't find anything on Friday. But if you do this every day, you'll find 1 or 2 a week, typically. If you focus on the U.S. market, you'll find even more. But this process, I mean, if we were timing this, the process that we've gone through so far probably has taken 2 minutes, 3 minutes. Onyx Corp made a pretty good breakout on Wednesday. Rising bottoms, flat top, breakout. That was a pretty good one. We're a couple days late now. Enbridge, here's an ascending triangle. Rising bottoms, flat top, broke from the ascending triangle there. This stock started its upward trend way back here. And we can see those stock scores go above 60 way back in there. And it's been just a great performer ever since. Here's I'll give you a chance to see this. Tell me if you can see a long-term pennant pattern that built in this chart about when it was, or when it broke from the pennant. I'll draw some lines here for you. this is Saputo. It's a food company in Quebec. I can draw a line across these tops, kind of like that. See the pennant? Yeah. There's our breakout from the pennant right there. Started a nice upward trend. Now this is a pretty conservative stock. I find stocks like this boring, but if you want boring, probably pays a dividend. Let's see what the yield is on that one. So you can also see the yield on stocks listed on Stockscores. So it's got a 1.67% yield. And this stock has gone from $41.50 to $45. So as a conservative, low risk kind of play, you know, you've earned about 8% already, plus the dividend. Okay, so that's how we use the tool on Stockscores for the investor approach. You can apply this in the evenings, the day, or during the day, on the weekends. A number of different strategies. We cover all North American markets. So the TSX, TSX Venture, plus all of the US exchanges. It's a very efficient process for finding opportunities. That took me 2 minutes. And I can do the US market, it might take me another 5 minutes. It takes a little bit of practice and skill, but once you learn that skill, it's pretty easy. Now if you want to do some simulating, let's say you want to go in and buy Enbridge on the simulator, why don't you jump over to tradescores.com, make your trade, punch in T.ENV. There's Enbridge, and I could pretend trade for a little while, make sure I know what I'm doing. That's real important. You don't want to start trading until you have some skill. Okay? That's all about proving your knowledge. If you can't make money on paper, you won't make money in the real market. Because what happens in the real market? Emotion. Emotion makes you break all the rules. So it's real essential that you do this. Then to execute the trade, you're going to go to your broker. I think you should have a direct access broker. Does everyone know what that is? When you place a trade, it goes to the exchange, right? So if you're buying a stock on the TSX, it goes to the TSX, and that's where the order is filled. But it goes through a broker. Now the broker can send that order directly to the exchange. That's direct access. Or they can send it through their market makers, who are going to try to fill your order for you. Now, if your market maker says, okay, this person's willing to buy the stock at $10, and in the market right now I can buy it at $9.98. Well, I'll buy it at $9.98 and I'll sell it to the client at $10. So the market makers made 2 cents a share. On 1,000 shares, that's $20. No big deal, right? But your commission, essentially, just went from $5 to $25 because the market maker got the best price and gave you the price you were willing to pay. Now, if you go direct access, you get the best price. The result of that is your orders fill quicker because they're just instantly going to the exchange. And then, of course, you always get the best price in the market, the prevailing price that's there, instead of what the market maker is able to give you. All right, so we'll talk a little bit later about my training programs, but to help you succeed at this, I created a 3-month training program. In the past, I taught classes over a weekend. People would come to my class, they'd learn a whole bunch of information, great information, but I also found that they'd leave and they'd forget some of it. Or that they wouldn't have had enough time to practice a certain skill. So I'm changing it this year. We are still having a live class. The live class is going to give you all of your important foundation information, the stuff that I need to teach you face to face. But then, over the following 12 weeks, I'm going to give you weekly assignments and lessons. So I will send you a video and a write-up and an assignment so that you can really learn the skills to do this properly. It's not really that hard, but it does take practice. It's like anything else. If you want to be a good cyclist, you've got to practice. If you want to be good at playing the piano, you've got to practice. Well, here, you have to practice as well, and doing it over a longer time period gives me an opportunity to get you to practice some of these skills so that in 3 months, you're going to be a better trader than if you just took a weekend class. As I said, with the investor program, your final assignment is to do a trading plan, and I help you with that. Everyone in here would have a different plan because everyone in here has different time commitments, risk tolerance, goals, that kind of thing. So your trading style, your risk tolerance is going to affect what your trading plan looks like, and that's why I work with each person individually to get that trading plan figured out. said, to help you succeed in the trading side of it, Disnat has their Active 5 offer, which we've outlined already. I will be giving you some more detail on the classes later on today, but you can get information on the Active 5 offer off these cards that you got or on the web there at the address on the screen. All right, so that's that presentation.